Hello traders, welcome back to the channel. This is Vishal and you're watching weekly sectoral analysis. Today I'll be starting this video with the monthly time frame chart because what has happened is that Nifty Spot has been correcting almost 5 to 600 points from the previous high, which was close to 20,000. So if we check in the monthly time frame charts, the trend is still up. There is absolutely no issues. Looks extremely strong. Even the RSI is looking very fine. No problem in that. But if I come to the weekly time frame chart, you will see some sort of price correction happening. And if you check especially this first candle and this candle, there is a lot of difference in terms of thought process in the minds of the traders. In the first candle, what we can see is a lot of selling has happened from the psychological 20K mark. And then over here, which is a support, 19,200, 19,300, this 100-point band is a support. Over here, a decent sort of buying has happened. And you can see from this zone of 19,300 or something, there has been a decent bounce back. And after this bounce back, again, there was a sell-off on Friday. Now, if I come down to the shorter term time frame chart, which is the daily time frame chart, you will see something very interesting. Try to see this candle and these four candles. Now, if you check properly, you will be able to see there is some sort of wick which is there in all these candles and even this particular candle. So it is clearly evident that there was some strong buying which was coming up at 19,300 levels. And one of the reasons for that was this particular level, which is a Fibonacci retracement in daily chart, is coexisting with the 19,250, 200 levels, which is almost nearby. Now see, this is 19,300 support. This is 19,250 Fibonacci retracement support. And immediately over here in Nifty Spot, there is a gap. So there is a support band between 19,200 to possibly 19,300. This entire 100 bands is a very strong support for Nifty. Now the main question in everyone's mind is, since we are in a bull run, it is in an uptrend in the weekly time frame chart, are we going to come down, test this support, and then we are again going to resume an uptrend, or we are going to close below this and continue and correct further? So that is $1 million question. And according to me, as a trader, I have analyzed all the sectoral indices and I'll share the analysis with all of you one by one. But I feel as a trader, as of now, it is very important to stay neutral rather than having a bias. And the main reason for that is, in case if the index breaks this support and thinks of going down further, correcting a bit further and then starting to go up, what will happen is you will not be able to exit psychologically in all of your stocks which you are holding long, or which you may think that you want to go long at this support. There are many people who try to go long at the support. I'm not one of them, but many people try to do that. But it could be disastrous if this particular support level of 19,250, 200 will be broken on a weekly closing basis. On a daily closing basis, you can see that we are close to a support. Even in the shorter term time frame chart, which is the hourly time frame chart, we are almost near support. 19,400 is a support. So if we maintain below this in an hourly time frame chart, yes, we could correct by probably 80 to 100 points. But again, 19,300 levels will come as a strong support for Nifty. Now, whether that will hold on, whether we will bounce from there or we will go further down, I think we should wait patiently and let the market tell us what it wants to do rather than, preempting things. Now, Bank Nifty, if you check properly, something else has happened over here. Bank Nifty was more stronger in comparison to Nifty, according to me. But what has happened over here is that Bank Nifty has broken below this small support band in the weekly closing basis. But there is also a strong wick over here. You can see this previous high, which was created on December 2022. So if we trade below this low, this particular candle's low, which was created on Friday, and this particular Fibonacci extension, which is at 44,050, So if we start trading below this and close below this, then yes, we will try to test even lower levels. That is what we need to understand. And currently the trend is down in the, daily time frame chart, and the trend is flattish in the weekly time frame chart. Okay. If you concentrate on PSU banks in terms of weekly time frame chart, the trend is up. What they have been doing is prices have shot up, have come down. Now they're trying to test the support level, which is coexisting with this support. And in the daily time frame chart, I think prices are all over the place. It's just going sideways and haywire. And one of the reasons for that is the correction which recently happened in SBI. Now, SBI currently, you can say, in terms of this correction, it's very surprising. But as far as this low is holding in SBI, I think we are still in an uptrend, and we are still in, you can say, a positive sentiment in SBI, because as per Dow theory, we are still maintaining the stance of higher highs and higher lows. Apart from that, there have been a few stocks in PSU banking stocks which have been able to maintain their stance. If you look at Bank of Baroda, it is still trading below this particular low, which is an important support. If you check Canara Bank, Canara Bank is consolidating. It has not corrected that much, which SBI did. If you check Central Bank in fact was bullish recently. If you check one of the important stocks, which is PNB is still trading higher. Okay. And if you check the early time frame charts, I'd also shared a positive view related with this stock, probably in a Nifty and Bank Nifty short-term view educational video. I think the trend is still up in the short term and even in the medium term. So I guess if SBI, pulls up its stocks and starts trending higher, it will be able to provide a decent support to the banking index. If you check the private banking pack has come down. Now it's trying to test this support. This is the 23.60% Fibonacci retracement of this entire bull run. And this support is exactly the same support, which is at 61.80% retracement in the daily time frame charts. So this particular level in the private banking pack of 22,700 is of great importance. If this breaks with decisive closing basis, big red candle, there could be a possibility we could be seeing lower levels in the private banking stocks. Okay. Energy pack. If you check energy pack, there has been a phenomenal breakout in the weekly time frame chart in the energy pack. Trend is, you can say, up, but there is some sort of lack in the momentum. You can see prices are going sideways, which is not very, very encouraging for the traders. If you look at Reliance, which is the king of stocks in Reliance pack, in energy pack, if you check, the stock has gone one way up. I wish it could have consolidated a bit more, or maybe corrected a little bit and then start going up. But rather than that, it seems that there is a lot of strength in the stock. And if it is able to sustain above 25.60 or even you can say 25.70 on closing basis, you will see some sort of momentum on the upside coming up in Reliance Industries. Okay. And even if you're a short-term trader, if you're extreme short-term trader, there has been a decent breakout over here. You need to understand. But some sort of resistance is there. So once we surpass this resistance, we'll see some spurt on the upside. All right. Let's have a look in metal pack. Now, metal pack is one of those index which is not extremely overstretched. In fact, it is not even trading at this particular resistance. It's a little bit far away from that. And in terms of Dow theory, we are still maintaining that higher highs, higher lows in the weekly time frame chart. The trend is up, certainly. And one of the stocks which looks interesting to me as of now is Tata Steel. With a viewpoint of a swing trader, if you have a look at the hourly time frame chart, the stock has been able to provide a very good breakout over here at 120. It's consolidating, but once the momentum catches up, I guess the price in this stock could go much higher from here. Okay. Autopack. Autopack was one of the outperformers in this entire rally, which started in March 2023. So Auto was one of the outperforming indexes over here. And if you check properly, the RSI in the weekly time frame chart in auto pack almost tested 77, 78, and it is but obvious that after such a stupendous rally, some sort of correction or consolidation is important, and that is what is happening right now in auto pack. So more the consolidation continues, better it is for the longer term time frame charts in the auto pack stock. Okay. IT. IT recently has performed very well with a viewpoint of short-term traders, swing traders, and maybe even momentum traders. And currently it seems that the trend is up, but there has been a very bad habit from the IT pack. The moment it catches momentum, it comes down. Again, it goes up, again, it comes down. So I think one thing we need to see very, very closely, which is there is a large gap over here, which has now been filled, but prices should close above this wick and continue trending higher. And the king of the IT stocks, which is Infosys, it needs to participate. You can see there has been a decent momentum, but there has been a big red candle over here, which was made on Friday. But if you check Wipro on the other hand, which I shared with all of you in my Nifty Bank Nifty short-term view videos, it has rallied pretty nicely. And after rallying, then it has retraced. But Infosys on the other hand, yes, it did go up, but the momentum was not there. So I guess momentum should catch up in Infosys and it should close above this 1440 levels. And once Infosys starts trending higher, the entire IT pack will see even more momentum coming up in next few weeks. Finance pack had rallied a lot, and it has been able to close below this 23.60% Fibonacci retracement. And you can see it is now trading just near this particular support band. It's very difficult as of now to say that whether we'll be breaking this support and go even further down, or whether we will consolidate over here and start rallying again. So as a swing trader, I will surely keep my eyes open, because once the prices come down, the risk reward ratio improves. And if there is some sort of movement on the upside in the hourly or the 2 hourly time frame charts, if there is a breakout, I think one can fancy the chances in the finance packed stocks as a short-term trader. FMCG, again, it was an outperforming index, but a few weeks back, there was a consistent triple negative divergence in RSI. And then we saw swing failure happening in RSI as well. And we can see prices are coming down. Along with that, last week, I also told you that there is a short-term trend line breakdown in the FMCG pack and prices are correcting. Currently, the prices are back to a short-term support, which is at 15,130. If we break and close below this support, then you will see further correction happening in the FMCG pack. Consumption pack also had rallied a lot, and if you check, there was a swing failure in price versus RSI, and RSI has also shown a negative divergence, and RSI had already made a high of 75 in a weekly time frame chart. RSI making a high of 75 is pretty overstretched, and some sort of correction was required, and that is what has happened. But in the daily time frame chart, if you look properly with a view of a shorter term trader, we are now back at a support. This entire zone is a support. So we need to wait and patiently wait, do nothing, just gaze at the price. If the lower level, which is around, you can say 8200 or maybe 8210, if this particular level is broken on closing basis, you will see consumption stocks correcting even further. And if the upside band of this entire zone, which is at 8350 or 8360, is broken on the upside, the closing basis big green candle, then you will see some upside momentum happening in this sector. So basically it's range bound, and we need to understand and wait and watch to see which particular side the range is getting broken. Infra pack pretty much overstretched. RSI is still above 70, and a good time for this sector to consolidate. Already you can see small green and small red candles are already being formed. So sometime, I guess as a swing trader, I would leave this particular sector aside, let it consolidate or maybe even correct. Once that happens, once the risk reward ratio improves, I'll probably start watching the stocks in infra pack once again. Pharma. Now Pharma is a pack which has seen a vertical rally in the weekly time frame chart. RSI almost near 80 or maybe even above 80, and you can see a big inverted hammer or a shooting star. So it is very, very clear that some sort of profit booking is coming up at higher levels. And over here in the daily time frame chart, I have plotted a Fibonacci extension, and you can see how nicely price has reacted at important junctures. Okay, even over here, it found difficult to surpass this level for 4 to 5 days. And generally in the daily time frame charts, rally did not surpass 423.60% Fibonacci extension, but in the pharma pack, it has happened. So it is a clear sign that this particular sector is overstretched on the upside. And if you are a positional trader holding longs in this particular sector, please do understand, stay vigilant, and as soon as your trailing stop loss gets hit, book your profits and just exit from that trade. Real estate pack. Now, real estate pack, if you check the weekly time frame chart, the trend is surely up, but there is a negative candle over here, and again there is a small red candle. So trend still stays up, but in the daily time frame chart, the momentum is lacking for this particular one-way down momentum. And what I feel is there is a fair bit of support coming up at this zone of 520 in real estate. If this zone is broken on closing basis, you will see some lower levels coming up. But if this zone is not broken, if we consolidate and if we start going up from here, I guess as a trader, I will try and have a look at DLF because it is the leader of this pack in real estate. And once that stock gives a breakout, probably other stocks could also participate. But we need to wait and watch. Just don't jump in the real estate pack just because it's trading near to a support. If this support breaks, we'll go even further lower. So keep that thing in your mind. PSE stocks. Now, if you check, the weekly RSI is almost near 80, which is at 78.45. Trend is up, not extremely overstretched, but yes, it is overbought. In the daily time frame chart, we are consolidating. Not a sector where a lot of swing trade should be initiated until and unless the risk reward ratio improves. But one stock which I did see was BEL, and this stock recently had come down, tested decent supports, and now it has given a breakout in the early time frame charts over here, somewhere in this zone, and it's trying to move higher. So I guess once it catches up momentum once again in the early time frame charts and break this resistance of 133, you can see a fair bit of wicks in this zone. 133, 134 is broken on an hourly closing basis. You will see some upside momentum coming up in this stock. Mid caps. Mid caps, I guess it's a no-brainer. You can see that weekly RSI is above 80. There is also a negative divergence coming up in the daily time frame chart over here in the price versus RSI. I would say trail your stop losses in the positional trades. Do not go aggressively long in this particular sector as of now, and be mentally ready that in case if your trailing stop losses do get hit, you can exit, book profits and sit aside. So summing up it all, I guess there are not too many sectors which are participating. One was obviously IT. It has rallied pretty decently, but now it is a test of time, especially Infosys, which is the king of IT pack. Once Infosys starts rallying, you will be able to see some sort of continuation in this upside momentum which had been maintained in the last few days. And another sector which I can see continue going up is the metal pack, but you'll have to be stock specific over here. You cannot just randomly pick any stock and start trading. So these are the two sectors as of now which I feel interesting as a trader who wants to trade on the upside. But in all other sectors, I guess it's a wait and watch thought process as a trader, because I'm more of a swing and a positional trader. I do not trade intraday. So I'll wait and watch and see if this 19,300 to 19,200 support band is broken by Nifty, or do we bounce back from here? If we bounce back from here, I'll start looking back for swing trades on the upside. If we break below this particular support zone, you'll have to re-strategize your trading strategy. All right. So I hope this video will help you to understand how markets are going to move in the next few days. Do share this video with other traders who need help in understanding how markets are going to move in the next few days. Trade well, trade wisely. Thank you.